Hey everyone, and welcome back to Underdog Investing. So today we're going to talk about Sofi. Firstly, I'd like to talk about their mission statement, and then afterwards I'm going to show you some really exciting news that happened recently, which shows how they're putting their money where their mouth is when it comes to trying to achieve their mission statement. And then I'm going to talk about the stock price and how we've seen wild swings recently. And then finally, I'm going to go through this really exciting article and very interesting, and it talks about why we've seen these movements in the stock price recently. And then finally, I'm just going to talk about what I'm planning to do with this stock. So before I jump into it, I'll be grateful if you can smash that like button and subscribe to the channel for future updates. So let's start with Sofi's mission statements, taken straight from their website. So Sofi helps people achieve financial independence to realize their ambitions. Our products for borrowing, saving, spending, investing and protecting give our more than 1 million members fast access to tools to get their money right. Sofi membership comes with the key essentials for getting ahead, including career advisors and connection to a thriving community of like-minded, ambitious people. Okay, so you can tell that Sofi's mission is extremely grand, and that's exactly what I like to look for when it comes to investing in companies. You want a mission statement which is larger than the company itself, similar to Tesla, for example, how Tesla's mission statement is to advance the world's transition to renewable energies, and it's more than just selling cars making money. So with Sofi, it's more than just creating a financial platform that other people can use in order to make Sofi money. It's actually to educate people, to empower individuals to make good financial decisions, to ultimately allow them to achieve financial independence. And I think with a mission statement like that, it's hard to go wrong as long as they stay laser focused to that mission statement. So let's go through the really good news that came out recently. So Sofi teams up with online learning platform Coursera for the fundamentals of personal finance specialization. So they actually teamed up with an online education platform. And who is Coursera? So Coursera is an American massive open online course provider founded in 2012 by Stanford University computer science professors Andrew Ng and Daphne Koller. Coursera works with universities and other organizations to offer online courses, certifications, and degrees in a variety of subjects. And you can see here they were founded in 2012 and had a revenue of almost $300 million in 2020 alone. So it's a huge company, which makes this partnership extremely good for Sofi. And let's have a look a bit more into this partnership. So according to Sofi, the program will consist of 5 courses to provide members with basic fundamentals of personal finance, which include an introduction to personal finances, saving for the future, managing debt, fundamentals of investing, and the basics of risk management. So I think these 5 pillars are very fundamental if you want to become financially knowledgeable and independent. And I just think this just takes me back to their mission statement. It just shows that they're really investing in educating and empowering people to make good financial decisions. So let's say if I was in the US and I was looking for a financial platform to work with for the long term, I would definitely pick Sofi. And the reason for that is because I don't think platforms like Square or PayPal, I don't think they're really trying to educate people or empower the individual. But with Sofi's mission statement, they truly want to do that, and this recent partnership just demonstrates that further. And then this is what Anthony Noto, the CEO of Sofi, said. So the basics of personal finance are often missing from school curriculums nationwide, but are fundamental in order to create a strong financial foundation. We created this program to provide our members and partners with financial education and empower themselves to take control of their finances and make informed decisions that allow them to reach financial independence to achieve their many ambitions. So again, a strong mission statement. I think they're very right in saying that school curriculums are really lacking when it comes to teaching people about finances and personal finance. And I think Sofi is really filling a void in the educational system, and it's really going to attract customers. It's going to attract people because their mission statement, like I said, is bigger than just finances, and it's about empowering the individual to make good financial decisions and allowing them to become financially independent and achieve their goals, whether it's extremely grand or whether it's small. So let's have a look at the stock price now. So the stock's at $16.53, about 2% up today, which is fairly decent considering the downturn we had recently. And over the 5 days, you can see we've rallied about 13%. Over the past month, we've kind of stayed stagnant. We've had our ups and downs, but we're about 3% down. And then you can see the 6-month chart. We actually hit an all-time high of almost $26 at the start of February, and since then we've had a 42% decline, and then we rallied a bit, and now we're down about 35% from all-time highs. So what caused this 11% rally, and what caused this significant downturn recently? So this article by The Motley Fool is very interesting. I think one of the reasons why we saw a downturn throughout February and March is because of the tech sell-off. We've had a massive tech sell-off. All the high growth stocks have been hit very severely, especially with the increasing yields. People were scared about the interest rates rising, and that resulted in a transition from high growth stocks into these more value, slow growing, safer stocks. So that was a cause for the stock price to go down. I think the other cause is because SPACs have just had a massive rally, and what happened was we've had a significant cool down, and I think that's actually very important if we look at the longer scheme of things. We don't want there to be a significant crazy rally which is just out of this world, otherwise we're going to have a crazy crash. And the SEC actually tried to prevent that by, let's have a look. So the SEC recently announced that SPAC warrants must be classified as liabilities instead of equity instruments. So the move, according to several experts, would likely result in SPACs having to refile their financial statements, which appears to be the case for SoFi. So the SEC also recently said that it is going to very carefully scrutinize financial projections from companies going public through SPACs. So lots of companies have just been going public through SPAC like crazy over the past year because they're able to raise lots of money, and what they do is they exaggerate their financial projections, make it sound like they're going to make plenty of money, and some of them are just not real. And this scrutiny that the SEC are putting on these companies is good for investors like myself and yourself, because it just means that we've got someone on our side who are making sure that these companies going public through SPACs aren't just spouting out rubbish, saying they're going to make loads of money when they're not actually going to, because that's very dangerous. That's what creates bubbles, and that's what is risky for us as investors. So both moves appear to have had a chilling effect on the SPAC market, forcing new listings to a halt after more than 300 new SPAC listings in 2021. And like I said, I think that's a good thing. We're cooling off the bubble and we're shaking off the weak hands, and this is going to allow the next leg up, and just a slightly calmer one, which isn't going to result in a crazy bubble which pops like the dot-com bubble. And so SoFi's been caught up in all of this, and clearly that's one of the reasons why this SoFi IPOE SPAC has had a significant decline as well. So, but they're actually back on track now. So things appear to be back on track now. SoFi announced on Twitter yesterday that it has resubmitted its S4 merger filing with the Securities and Exchange Commission to comply with new accounting guidance issued by the agency regarding SPACs. So we're on the right trend at the moment, and I think we will continue going upwards from here. So once we clear any comments of the filing from the SEC, the next step will be to request effectiveness, followed by a mailing of the proxy and a duration of 3 weeks for shareholders to vote. So I think if we ignore all the noise from the tech sell-off and from the recent SPAC scare, I think that SoFi is an excellent company with a grand mission statement, and I think this is exactly what I've invested in. I actually have an average price of around, I think, $20 to $23, I think, and so I'm down quite significantly. So $25 or 20, around 20%, but I'm planning to hold this stock for long term because aside from all the SPAC hype and everything, I think this is a good long-term stock to hold. I think they've got a great mission statement, and I think if they stay laser focused on this mission statement, great things could potentially happen in the future for finances, for the financial industry, and I think they can really shake it up a lot and compete with the big boys like Square and PayPal. So that's the end of the video. I hope you enjoyed it. If you did, I'll be grateful if you could smash that like button and subscribe to the channel for future updates. And also, I'd love to hear your thoughts in the comment section down below. What do you think about this new partnership with Sofi and Coursera? Do you own any Sofi? Are you planning to buy or sell? And finally, if you found it useful, please do share this with your friends. Thank you so much, and I will see you in the next one.